In today's Canadian real estate market update, I'm going to discuss some of the most recent sales statistics and show you what's actually trending out there in terms of activity, days on market, months of supply, and what does it actually mean to you, the consumer. I'm also going to touch on some of the most recent Bank of Canada announcements and forecasts for what's coming down the pipeline. So let's jump into the stats. For this session, I'm going to focus on the ITSO board, which is the largest board in Southwestern Ontario, comprising many markets outside of the GTA. Why am I focusing on this data set? I think a lot of the stats that you guys are getting are coming from only two major markets, Vancouver and Toronto, as if that is the entire country. I think the stats you're about to see are going to be very surprising to you if you're not talking about just pre-construction condos in downtown Toronto. So in January 2024, the average sales price was $749,611. That is actually up 3.6% from January 2023. The number of new listings that you're seeing coming to market, it bottomed out in December, but it's on its way back up. One pattern I really want you to pay attention to is look at how this is cyclical every single year. You see a bottoming of the number of listings that are active in December, and then you see it slowly increasing. And the number of homes for sale, there is a pattern, right? In the bull run of the marketplace from 2020 to 2022, you'll notice that number of listings really dropped. The number of homes for sale is actually on par with where we've been historically. Actually, if you're going back to 2011 through to 2015, there was actually a lot more houses for sale then. It just doesn't feel like that because we're still leveling out from those 2020 to 2022 numbers. Now, this number is going to make you smile. The number of sales is actually increasing in January. And yes, it did bottom out in December. We had a very odd fall market. It's almost like the fall market didn't even happen. And now that January is here, it seems to be skyrocketing back upwards, almost like that fall market is happening now. Now, if you look at the same stats last year, there was a run from December straight up until May, and then a massive drop off. A lot of people are forecasting we're just in that exact same curve. And if you look historically, there is a pattern, January until March, and then a drop off straight through until the end of the year. So that these are cycles that we're used to seeing in the real estate market. Canadians like long weekends and we work really hard. And then after May 2 long weekend, a lot of people are going on vacation until they're getting their kids back in school. And then they start shopping for houses again. This is the typical cycle that you will see when it comes to sales activity. Now, the big difference is if you're looking to sell your house and you're not in a market where it's going to sell in 7 days, you need to think ahead. So if you want to list in spring because you think that's the best time, well, back in the day, maybe listing in April made sense because your house would be sold in a week. But if the average days on market is currently 38 days, well, you need to be planning ahead. Like, are you listing in February or March in order to sell in April or May before that drop off happens? Definitely something you need to think about when it comes to strategy. And the average days on market is increasing. When I go back, actually, have to go all the way back to 2015 to see average days on market above where we're actually at now. And I think this is because a lot of inventory has been sitting for a very long time. Some homes have been for sale for a year or longer, and many of them are now going through price reduction cycles to get them in the market, as many people would say. Now, months of supply is currently at 2.6%. Months of supply is actually heading down. A lot of old inventory is selling, and it's actually clearing out a lot of that old inventory, and you're seeing new people come to market and actually be a lot sharper with their price points. So I would expect the months of inventory to continue declining if we see people coming in with sharp price points. Now, the percent of original price, the average is actually 96.3%. So if a home is for sale for $1 million, it's going to sell for $963,000. Now, percentage of original price and percentage of list price, I think these two numbers are important because if you list a house for $1 million and you had to do a couple reductions, looks like it's going to sell for $963,000. If you priced your home correctly, it's actually going to sell for $975,000, meaning you're making a little bit more money because you priced correctly. But this is also an indicator that people aren't listing homes for $1 million and taking just hundreds under what you're asking just because, yes, those incidents are happening and they're outliers. The average house that is selling is actually still selling very, very close to listing price. The average price per square foot is increased $7 from $411 per square foot to $418. And the total dollar volume of real estate that traded $2.5 billion is actually above what it was in January 2020. So the actual number of real estate transactions that are happening are much higher than people are talking about in the media. I wanted to highlight something else I don't normally show on these videos, and this is the market watch section. So if you look here and you see number of new listings in the last 7 days, how many back on market, conditional, pending, and closed, The number of new listings that hit the board in the last 7 days was 330. But look at this, the conditional and pending listings and closed actually tally up to close to 300. So given all those stats I just showed you, that was the last 30 days of data. In the last 7, you're seeing almost as many listings coming to market than that are coming off the market. That's a big indicator of how active the marketplace is. I know people have heard all kinds of stories about 85 offers on one property, agents underpricing listings for bidding wars. That is an indication that like strategy is changing, right? Asking price is literally just a marketing tool. Do I necessarily agree with those strategies? Depends on who you're talking to. If you're talking to the seller, did they achieve a number higher than what they actually would have expected or what it would have sold for? I know some agents are saying, well, if you would have just priced it at what it was worth, it would have sold closer to that, maybe, or it would have sat on the market and then had to go through reduction cycles. And what happens if that property sits on the market for 30 days, has to reduce 10 grand and then gets an offer 30% under that? It is happening. So you can't really look at every listing and say this would have happened or that would have happened. You have to take every purchase and sale at its face value. And you need to have a strategy, whether you're a buyer or seller. Would I have encouraged buyers to participate in an 85 offer, multiple offer situation? Probably not. Would I have encouraged clients to take out a home sale condition just so that they could get the property? Probably not, because the market can shift like a light switch. And in 2 weeks, all of a sudden, if they can't sell their house and they've already made an offer on another one, they may be in a very, very difficult situation. Going back to a couple of the headlines, the Bank of Canada on the 24th held the interest rate. I think this was a non-announcement. We were all expecting this to happen. And we are forecasting that they're going to continue to hold rates straight through until I'm estimating about June. Some people are saying March, but do I see them increasing rates? Absolutely not. They're talking about inflation being at 3.4%, which was the next headline. But if you take out housing, which was close to 37% of the overall CPI in the States, they don't even use that metric when they're calculating the consumer basket of goods. They're looking at energy, they're looking at food, and they're looking at housing costs. But how can you raise interest rates on consumers and then turn around and say, well, inflation rates just keep going up, when the highest contributing factor to that inflation rate is the interest rate that you're increasing? Bank of Canada knows this. Everybody knows this. And they're going to be holding rates until they get to that spring, summertime, where they're going to start reducing that interest rate number, which what they're trying to avoid, I think, is a run on the marketplace. The problem is the consumers are going to start coming back into the marketplace when they see that runway ending. We are already seeing it right now. So what happens when they actually start reducing rates? Now, the next problem they're going to run into is the exact announcement they made yesterday. It's what I've been saying on market updates for months, if not years at this point, where high interest rates are not to blame for housing crisis. Bank of Canada governor says they are planting the seed, people, that for all their efforts, increasing interest rates have not leveled prices and made homes more affordable. It is a free marketplace, and there are still more people than there are houses. And their increased interest rates have actually taken a ton of new supply off market. So what's going to end up happening is, as this machine comes back on and builders start realizing that people are back in the marketplace and they start selling units again, that machine is going to start building houses. But is it going to be enough to catch up with the consumers that still need homes? And the pressures that have been on the rental market have caused the vacancy rates to absolutely plummet. The amount of investors calling about London, Ontario right now and the surrounding region that we cover, asking about rental properties, multifamily properties, stuff that hasn't really been popping off over the last couple months because it's just been so expensive to borrow on these types of property. The deals don't pencil. You're going to notice people buying up rental stock because vacancy rates are so low. So many people have been taken out of the housing market because they can't afford to buy houses because prices are still fairly high, all things being equal, but the cost of borrowing is also very high. I think some pressures will come off the rental stock a little bit as people are able to get back into the housing market. Yes, prices are 20, 30% what they were at the peak. It's going to make it more affordable for them to go in and say, okay, you know what, maybe I don't have to rent. And maybe that gives a little bit of relief for that rental stock. Who's to know when that actually happens? But I know a lot of renters will be thankful for when that time actually comes. And the last headline I wanted to cover, and I'd love your feedback on this one from a consumer perspective, is the new duty of cooperation added to the Realtor Code of Ethics. And this is a doozy, people. So if you're selling a house and you hire somebody with, say, a large social media following, as of the launching of this new code of conduct, that agent within 3 days of doing any type of public advertising, which is a sign on the front lawn, which is a post on social media saying, hey, this listing's coming soon, people, have your agents call me. We'd love to work with the monitor. If you want to come see it, let us know. It has to be on MLS. This mandate will mean that you as a consumer have to be on the MLS system if you're working with an agent. Otherwise, they cannot publicly advertise the listing. And that is a 3-day window. Some boards are taking a different time frame for how long they're going to allow it to be coming soon before it goes public. What they're trying to get rid of is bad actors and people that are not cooperating and allowing as many people to see the listing as possible. And they say the MLS system is the best system to allow for the consumers to see as many offers or allow for cooperation. But I feel like there's some problematic things with this new duty of cooperation that was added to the code, because it's actually going to restrict people that were already collaborating and cooperating at a high level. We have a massive social media following, and we let everybody know when listings were coming. We're posting in Facebook groups with other agents. We're letting the public know, hey, if you have an agent, have that agent contact me. We always cooperate. But I understand why they're doing it, because there are bad actors out there that try and double end every single listing and don't want the public to know about it. Unfortunately, if you're a consumer out there and you're working in an area that we cover, you're going to want to contact us to get our exclusive listings that are not publicly advertised, because we have clients that have no intention of going on MLS until maybe spring, summer, or fall, depending on what's happening in their lives. But we are actively marketing properties. This goes a little bit more in depth with some of the big rule changes that happened in December with Tressa and what it means to be a self-represented party. We'll cover some of that stuff in future videos. But let me ask you this question. You're a consumer when you're selling your property. Do you want your agent to have all of the tools available to them, including posting on social media maybe weeks ahead of time? Or do you like the new duty of cooperation? I sit on multiple boards. I'd like to be very involved from a regulatory perspective. So I'd love to pass this up the chain to leadership. I think we need better professional standards in our industry. It's one of the reasons I do so much video online. Really hope you got some value from the market update. Let me know your thoughts. When do you think that they're going to be dropping rates? What do you think is going to happen with the marketplace? Do you think we're going to have a supply problem coming down the road? Appreciate your time as always. If you've never been to this channel, hit like and subscribe so you don't miss any future videos. We always love sharing boots on the ground data, off-market properties, and our thoughts on big regulatory changes, and always like keeping you in the loop when it comes to Canadian real estate. If you want to connect with us or the team and jump on a one-on-one call to talk strategy about anything, feel free to just hit any of the links below and connect with us, and we will see you on the next one.